guess we're good to go. I guess welcome everybody, and thank you for joining us. I can't see any one of you, so I'm hoping it's a full house. I guess firstly, it's pretty hard to follow Carl. I don't carry the shaved head as well as he does, so I'll try my best. My name is Arjun. I'm a partner at Arthur D. Little, and the topic we're actually going to be talking about today is very close to heart, because I think I've been involved in BNPL in some form or capacity for the last 6 to 7 years. Actually, the journey started in Egypt for me when I was still on merchant side and I was not a management consultant. Since then, I've actually seen this sector bloom. I am definitely someone who's a supporter of the sector. I get a lot of flack for that. But I still believe that actually it is positive disruption. And what I'm very pleased to see over the last sort of 5 to 6 years is that not only globally are we seeing the evolution in the so-called product, which is BNPL, which some can argue is centuries old and has been refashioned for our new digital age, but actually we're starting to see new business models emerge out of the BNPL players. Now, a number of them have gone through a fairly hard time, no names to be mentioned, but there's been pressure on margin. A number of them have lost maybe 70, 80% of their market value. But I think the good ones who are doing the right thing still continue to sustain and grow. So with that, I'd quickly not quickly, but they can take their good time. I think each of the panelists should introduce themselves. Ali, why don't we start with you?
Thank you very much, Arjun. Hi, everyone. My name is Ali Imran. I'm Chief Operating Officer at Commercial Bank of Dubai. And CBD's sole purpose is to back the economy of UAE and Dubai. And we've been quite active in participating in the fintech ecosystem and backing some of our partners, which does include some BNPL player as well. Glad to be here. Thank you very much.
Welcome.
Hi, everyone. I'm Tariq Sheikh. I am the founder and the CEO of Postpay, one of the leading BNPL providers in the Middle East. We operate across the region and have been around since day one, so I'm looking forward to this panel.
Ali.
I'm Ali Saeed, founder and CEO of BluePay. My initial background in banking, I worked with Standard Chartered Bank in Jordan, Iraq, and some of my time in Dubai. Worked in Capital Bank of Jordan and other banks. And I started helping some friends in founding a company, an e-payment company in Iraq, which at that time I fell in love and I had so much passion for the e-payment. And I started my own company 2 years ago, which is BluePay.
My name is Ahmed Wazan. I'm MD Top Payments UAE. Just to give you a brief about TAP and the relevance of our line of activity to BNPL, we like to describe ourselves as a technology or innovation-driven company that provides payment services to merchants, where we enable merchants to accept online payments through international schemes as well as local and regional payment methods. So we act in a capacity where we handle the complete payment cycle of the merchant, including the onboarding phase all the way to the handling of funds and clearing. We also focus on, give a special focus on standardizing and unifying the payment experience for merchants across all the regional payment method. For the purpose of supporting the merchant into their regional growth within the market.
Great. So welcome to everybody. I guess we've got a great mix of perspectives from banks to payment players to actually a BNPL founder. We've got a merchant missing, but I'll try and fill boots because I was one for about 6 years. I think I started with mentioning the fact that we've actually seen a lot of innovation in BNPL or in some parts of the world, BNPL and POS financing. Tariq, I'm going to come to you first because it's the right thing to do. You are a founder of one of the first BNPL players in the region. Talk to us about how the last 5 years or so has evolved in terms of BNPL, both in terms of the evolution that you have seen from customer adoption, merchant adoption, product evolution, and I guess most interestingly, how you as BNPL players have been evolving.
Yeah, sure. I think turn back the clock 4 years or so, Arjun, we were sitting opposite each other and I was trying to sell you BNPL in the region. So it's interesting to be here a few years later. Look, I think the context was very different. In 2019, when we were having our first conversations around BNPL with merchants, the big elephant in the room was cash on delivery. No one really cared much about BNPL. They were trying to solve this big issue around, returns linked to cash on delivery, etc. And I think we've had several different tailwinds that really helped us build out this product so quickly in the Middle East that I would argue grew faster than many other regions in the world. Obviously, there was the pandemic. There was the massive shift to a cashless economy that was sort of enforced by regulators, which really helped. And then there's also just the market that's booming. So if I look at it, we had also about 1,500, 2,000 merchants on record 2019. And some of these big groups have shifted, right? So we saw all of the groups shift onto e-commerce. Saudi Arabia just went absolutely, it boomed. So we've seen thousands and thousands, tens of thousands of merchants. So the addressable market itself has grown. E-commerce has grown. So we've had a pie that's been growing twofold, which has allowed us then to serve a specific need in the market. Today, we are sitting with a multi-billion-dollar market in lending, with millions of customers using buy now, pay later as a native payment method sometimes. And we have thousands of merchants, sitting and using this across in many different verticals, which we can get into perhaps later in the conversation. You can argue anything you want around the sustainability of the model, the supply side issues, and there's a lot of conversation around valuations, etc. But one thing you cannot argue about buy now, pay later is the demand. Customers love it. Customers use it. And I believe that customers will continue to expect it on merchants across the region and globally. So, and I just want to talk really quickly about that in a minute or two. What we've done is we've changed the way people look at financial services. And I'm sitting here on a panel and we work with some of the panelists here. We have shifted the way they think about financial services in that we have allowed financial services to sit at the inflection point of a customer deciding whether to purchase a specific object, item, whatever it may be. Now that in turn, and in very simple, in simple terms, means we have data on where they're shopping, we have data on what they're buying, we have data on where they're buying it, what time they're using it, and all of the other behavioral dimensions that you would take into account to actually assess the risk of this customer, which you couldn't do before. And in turn, that's lowered NPLs into phenomenal low numbers, and all of this results in a product that can be very low or zero cost to customer.
Okay, but I'm gonna put you on the spot, right? So that's all good, right? Tell me what are the 3, maybe 4 big pain points that you have which are holding the growth of the entire sector?
Look, I think, again, I think from a supply side, there are some things that we do really well, right? And briefly, we are at the forefront of user experience in a way that other financial institutions, financial services players just simply do not want to, right? We connect with merchants, which, for example, Ali from CBD, they would not actually go and connect to merchants. They would not actually set out sales teams and do these things. But what we don't do very well as BNPL providers, and I'll say it, is that we're inefficient lenders. And I'll explain that in a very simple way, because it's a little bit more nuanced, and if you're not in the crux of it, you won't really understand it. But at the end of the day, we're not regulated as a lender. So we cannot avail 100% of facility or debt facility from a bank or for a venture debt player against 100% of our book, which means we're constantly pressured to lend, to borrow or to use equity to finance 15 to 20% of the book from our cash. Now, a year ago, 18 months, when valuations were 100x ARR, that made sense because we could raise cash with a really, really low WACC, so it was completely different. But now that valuations have sort of right-sized, and I used right-sized because I believe that they right-sized and they didn't plummet, it's putting stress on the model. At Postpay, we've obviously looked at unit economics very seriously from day one, and I won't go into a whole spiel about our company and how we look at it. I think it's more about in the industry here. But that's essentially where we've seen the pain point. It's around how do we leverage financial institutions, banks, on what they're good at, which is having a balance sheet that's many, many times the size of ours, or even close to where we're able to get. And two, also the regulatory aspect, where they're able to do longer tenor, longer term products that will allow us to serve the market in a more interesting way.
Ali, yes. Can I ask you to hone in on Iraq? Because I don't think we've covered Iraq in the conversation Tarek's mentioned. Can you give us a bit of a flavor of what exists in Iraq?
Yeah, just before going to Iraq, I just want to add something on just what Tarek mentioned. There's nobody is challenging the demand, okay, on the BNPL. But let's be frank about it. Now, the main users for this new technology are the Z generations, the Zoomers. They have less awareness about the future and what their future obligations can be. And from risk perspective, I'm just trying to wear the hat of the banking experience that I had. I feel this is I would start to doubt the sustainability of this model. Again, I'm not saying that it's a great technology. The BNPL technology, it's great, but having the service or technology as a lender, that would be the issue. I mean, if we can combine banks and the technology to provide the service, I think this will give it, a more sustainable position. Now, the PNBL is not like it's a new invention. I still remember probably 30 years ago, my dad used to be a wholesaler for home appliances, and he used to give appliances to small merchants with 0 interest rates based on just knowing them and against future payments, all right? And this is what's happening now. It just comes into
BNPL existed from the times of the Babylon.
Exactly. So it's just now into a technology. Now, in Iraq, there is, despite the fact that the market is growing very fast in terms of e-payment in general, and there is hunger for it, but the PNPL is not there yet. However, what I would see in the near future, a B2B PNPL, because it's already there. So when the technology comes, it will organize the system, lower the risk for the big wholesalers, and will make the whole transaction seamless. So instead of having cash, all the big wholesalers will get their funds in their bank accounts.
Can I just, yeah.
You can?
I just want to add something. So I don't think that the sustainability of the model is based on Gen Z at all. Actually, we have data in the region to show that Gen Z is a portion of our sales, but really it's these millennials. And if I start slicing down by vertical, you get to see very different attributes. In fact, we can follow a customer journey starting with fashion, move into something like home furniture, and then you see a much higher demographic with education, which we started to get into. So I don't think you can blame it on that. But I would say the sustainability issue is around efficiency of cash and efficiency of the model with cash. So that's really just, if I put it down to one pain point, it's lending.
All right. But
That's my...
in that point, listen, bankers usually they have some kind of delay. You know, if you compare it to the tech companies. I'm sorry, I'm not taking your part, Ali.
No, we're going to ask the banker that question.
All right.
So I'll
I
let you
just wanna
finish and then.
talk about it from tech perspective. So usually banks, they have some kind of delay. Tech companies, they are much faster, okay? But when banks start to get the rope, they are much aggressive and much powerful. I just want to tell you a very fast little story. So in Jordan, there were two acquired companies, without mentioning names. They were, you know, they have like, each one have some kind of share of the market. But after 6-7 years, one big bank decided to get into that market. He slashed the MDR for the vision of having those merchants as his customers to get, you know, to give them loans, credit cards, and so on. Yeah, sorry about that. You can.
No, so let me
I'd like to add,
pose the
actually,
question,
yeah.
right? We give you technology, you banks fly.
Yeah, I'm not too sure about that because banks also have a lot of legacy to carry as well. So I think as a starting point, in my view, the sustainability of a BNPL model is around at a unit level. If you are not giving away something out of your equity and just making losses, no matter how much you scale up, you will end up burning all the cash. And that's what some of the players did, and they don't exist today, actually. I think one thing we have figured out that this is an alternate lending model. This is not a fintech, which means it has an equity and a capital requirement for deploying to lending. And equity is not a greatest use of giving away up to your debt. So I think naturally, to scale up any alternate lender model in the world, you have to partner with a bank because banks are a deposit-taking activity and their inherent cost of fund is lower, obviously.
True.
And I think the other area which I personally think, I don't think there was any technological breakthrough also, either in BNPL, if you ask me. I'm like, extended payment plans is there since 70s in the cards business. What I think the key learning was brought to the table was the access to this service, where typically bankers think it in a very incremental way that I have assessed someone one time and I've given him a credit limit, now he or she will withdraw it according to their needs and want. Here, the ability to be at a touch point where the moment of truth is there while somebody is exiting a checkout or exiting a merchant and giving them an intercepted, embedded option, I think that was the sort of the catch or the take-up was there. Now, obviously, there's a bit of a synergy there because that setup in terms of a frictionless objective is there from BNPL players. I think there is some merit in banks to partner up, be it on a capital side. I see three distinct participation from a bank's perspective. One is to be a capital provider. Second is to be an infrastructure provider because you do need a local payments service provider to settle, to do the cash management, because BNPL don't want to be a full-fledged bank. They don't want to be regulated like a bank either. The innovation will simply disappear because bankers are paid to be compliant, not necessarily paid to be overly innovative either. And then I think third and the most important part is I do believe in the BNPL journey where it is today from here onwards, not necessarily D2C, which basically these guys have nailed better than, and we have seen all direct-to-consumer businesses learnings are coming from fintechs, paytechs. I think on a B2B level, there is a merit to look into certain use cases with BNPL players. And I truly believe the disruption in terms of right sizing of funding will force BNPL players to rethink their model fundamentally, to see what can they monetize beyond only that balance sheet play, be it a credit model. I think there's a great learning for consumer banks to learn how to underwrite risk. The way these guys have done using some data points beyond a very traditional credit bureau pull, beyond that, you know, that's what a traditional banker will always think, that I have a credit bureau, a FICO score, I'm going to go for it.
Yeah, I think there's a couple of very straightforward use cases, whether that's high-value BNPL or going into B2B. Ahmed, I haven't forgotten you, right? So I think I'm going to pick up on the point, which is sort of that moment of truth, right? For me, in simple terms, what BNPL has achieved is blurred the lines between payments and lending, right? If you were to go and do a blind test, or a blind question, I think a very significant percentage of the crowd you would ask would react to BNPL as a payment product, right? You're obviously in payments, right? What's your take in terms of BNPL, and what are your merchants talking about?
Sure. First of all, I'd like to share that as a payment provider, we have witnessed a good level of adoption and the growth in BNPL providers within the regional markets that we operate in. Now, as a payment provider, we do sit from, let's say, try to sit in an equal distance from each provider and try to be payment method neutral, let's say. But at the same time, we do like to put the effort in supporting the new initiative, the new innovative, let's say, tools and products that come into the market. We believe putting that effort can support the industry and, create more progress to the industry that we operate in. Now, from our perspective, there are a few important elements that we can do to support the BNPL, let's say, into the achieving more growth, let's say, into the market. First is having to do with the integration setup. With the right integration setup you're having with the merchant, it makes it easier on us and the merchant to enable newer payment methods, including the BNPL. Again, with the concept of embedded, let's say, standardization or embedded unification within our products and integrations with the merchant, it makes it really easy for the merchant to enable the payment method without having to put the effort to making, the required technical changes. One example I recall here is what we have experienced in the market of Kuwait, having to do with Apple Pay when it got enabled earlier this year by the issuer banks. What we were able to do is to enable the payment method, although it's not a BNPL, correct, but it's given that it's a new payment method to be enabled, we were able to enable it for a very large number of merchants, including SMBs, without the need for the merchant to make any changes. So we think that this was a great example on how a payment provider can support, let's say, the growth or the penetration or adoption, let's say, of the new payment methods such as BNPL. Another important part that I'd like to focus on is the education and awareness based on what we have experienced with merchants in the region. We often get inquiries and questions. Yes, it started with a high number of questions and inquiry, and maybe in the recent period has lessened, but questions and inquiries about the, things relevant to the repayment cycle, things relevant to the settlement cycle, and both from a consumer and a merchant perspective. The sustainability of a BNPL provider, which is also a point that has been, let's say, a repeating point, especially by a larger merchant. So definitely, I think the education and awareness is something that is very crucial. There is some work that has already been done by parties like us and actual BNPL providers, but I think there is also some room there to, for additional, let's say, spread of awareness and education.
Two quick points on that. Yeah, I agree in principle from the integration part, but two other points that are really important from a merchant BNPL perspective, or payment provider BNPL perspective. One, lower acquiring. You have scale of acquiring that BNPL doesn't, so you could probably get lower acquiring, which in some parts of this region is easier to do than others. And the second is just what we've seen as well with some of our APM partners, including TAP, is leveraging the sales forces. So you can actually scale down your sales force and leverage other parts of the value chain.
Okay, so Tariq, I stay with you, right? There's no doubt whether BNPL is growing or not. The economic model is hard, right? It's hard to make money, right? How are you guys going to evolve? What's going to be different? Because you cannot carry on this business model on the margin levels that you are and sort of hide behind scale and valuations.
Look, I think I mentioned the first point already, which was really around how to address some partnership model to enforce the supply side of capital. I think that's one thing. But let's just take it back for a second. Understand the BNPL model to be a model where you have it's growing enormously, but from a unit economic perspective, our maximum upside is maybe 1-2%, right? And our maximum downside per transaction can be 100% of the transaction. So that's fundamentally what we guard against, and we're doing our best to solve for. When we're working with high volume, low margin type businesses like ours, one, obviously scale is important, but secondly, any uplift in the margin is important. Now, if you look at tech trends, just generally, what have you seen? You've seen companies create new industries by offering them for free. You look at your rideshare today, you look at your delivery applications, and there are fees today that you didn't pay in the past because they needed to create an industry. I don't disagree that something like that would have to happen in the BNPL sector in order to create further sustainability in the model, simply because we might have been providing something for free that no one asked for free. And they'll be now willing to pay a small margin for a service that they clearly understand, they know, they've been using, and this may come in many different forms. It might come in premium fees or subscription fees. It could be as a simple convenience fee per transaction, etc. But as we move towards longer tenor and higher average order value items, the entire model changes. And our 100, 200 BIP model doesn't work. So we have to have a cost to customer for the longer tenor. And that's where we come into partnership with the banks, with financial institutions who are regulated to be able to do that, because we are not. And so that's where you'd have to see APR models come in. And this is not something that I'm mentioning out of the blue. You've seen this in other parts of the world. You've seen BNPL providers work with banks to provide longer-term products. And just to argue the point, one of the other key elements of BNPL was the fact that we were able to transform an otherwise extremely tedious and sticky journey into a couple of seconds. Users can check out in a couple of seconds, and that is what creates the value of embedded finance or point-of-sale finance.
So Ali, I come to you, right? You come from a market where I'm assuming the dominant transactions are still offline, right?
Yes.
Yeah. BNPL is not vetted to online. Yes, it was conceived in this e-commerce world, but let's be honest, still 70, 80, 90% of the transaction, whichever market you're in, is offline,
Sure.
right? Specifically from the BluePay perspective, right?
Yeah.
What is it that you guys are thinking in terms of energizing the ability to offer this option of lending, whether with a bank or a BNPL player, I'm not worried about.
Yeah.
How do you expect to get that, I guess, billion-dollar question answered?
Well, again, when you think about the risk and the way we're planning for it is to provide the technology to the local e-commerce existing in Iraq and basically connect this system and technology to all available banks in Iraq. So we can, if any banks has customers and those customers would like to buy specific product from this specific e-commerce shop, they can just go to that website, they choose the pay now, buy now, pay later, and choose their bank and click, the transaction is done. We see it's for the current situation in Iraq, this can be much in a proper way. I mean, even when I think about it, sometimes for the BNPL, the global model where the service provider is the lender, what would happen when recession comes, when income goes lower and margins get squeezed? What's going to happen next? So this is one of the fear that I have personally when I think about BNPL, applying it in Iraq. So for the current stage, anything offline, anything that would enable customers to make their transactions, as Tarek mentioned, faster, in a seamless way, we're going to do it. But we're going to apply it more of a SaaS model, okay? I'll give you this solution, I'll take a piece of the transaction, and everyone is happy.
Okay, Ahmed, small merchants, and I'm going to really put you on the spot on this, right? So there's a whole host of small merchants. Most of them are not e-commerce enabled, right? They want BNPL as an option to their customers. You have a relationship with hundreds of thousands of these. Why wouldn't you enter BNPL yourself with the technology platform? Why wouldn't you integrate that? Because how else are you going to solve the problem for these guys?
See, we believe in specialization at Tap Payment, and we believe that our specialty is to enable the different payment methods and to enable as much as possible, let's say, locally and regionally adopted payment methods. What we do instead of coming up with the product ourselves of BNPL, we would rather put the effort in partnering with people like Postpay and providing a better service or a more tailored service to the merchant. From SMB perspective, again, back to the same point where the integration there is key in providing the enablement of a new payment method. And this really sits on our, let's say, relationships today, or the connections that we have today with the SME ecosystem already, where they build their websites, where they, the tools that they operate for their accounting function or even invoicing functions. So we make sure that we're connected with those so that the enablement of any newly adopted payment method becomes in a very fast and quick manner, and most importantly, doesn't require any required changes, let's say, from the SME perspective. We have to remember that from an SME perspective, there is a lack of resources. So we make sure that the service or the embedded, let's say, standardization that provides support them into providing, or enabling, let's say, the newer payment methods and features.
So you don't want to do what PayPal did?
We don't want to?
You don't want to do what PayPal did?
No, we do enable PayPal, in fact.
No, I said PayPal actually went into BNPL directly. Yeah. They did not choose to partner with anyone because they said, we have the merchant relationships, right? We actually transact everything on them. Most people treat BNPL as a payment, right? So why don't we just offer BNPL?
Are you asking from our perspective?
Yes, I'm asking from your perspective.
No, because, see, essentially BNPL is more of a credit practice rather than a payment enablement. And with the whole credit practice, it's a different body of expertise. I'm not saying that we cannot develop it, but we'd rather to solve the payment issues that we have within the region today. We live in a very fragmented, let's say, regional markets where each, market has its own locally payment method. So you can imagine the hassle of a payment that resides in UAE and have a large customer base in Kuwait and Bahrain, not being able to provide a localized experience, from a local switch or a local network, or the adopted BNPL option within Bahrain or Kuwait. So we make sure to build the bridge between those regional markets so that we support merchants not even in the growth within their markets, but also the growth regionally within the market.
All right.
So I hope that answered your...
No, that's fine, you do. I think in roundabout manner, you're telling me you want the milk, you don't need to own the cow, so which is fine. I'll come to Ali, two-part question for you, right? So you mentioned points around, there are three areas where you actually said that banks and fintechs or banks and alternative lending players can work. What is expected from you, or what are you expecting from them to do differently or better for these partnerships to become more frequent, bigger, and flourish? Hold on, second question. While answering that question, how do you ensure that we can continue to lend ethically, right, and mitigate some of the risks which, as the sector grows, will become more and more evident?
So I think both questions are interlinked. Banks
why I
are
asked.
essentially, the moment we expect a fintech or a paytech or an alternate lender to partner with a bank, by definition, we are under regulation of the consumer protection, ethical lending, and that's what we bring to the table, which is all around disclosures, all around making sure that the clients are taking up something which they are well aware of what are the implications. I truly believe there is a demand which does exist, and I think the point which Tariq was making, fundamentally, I don't think BNPL players in short to medium term, given the cost of capital and the cost of funding today into the market, will be able to scale given their margins. They will have to think beyond lending revenue. And I truly believe that what they bring to the table for a traditional bank player is their credit model monetization. Again, banks have been in centuries for giving money and taking money. I think giving money, especially if it's not yours, is the easiest thing to do in life. And then bringing it back is the most challenging part, essentially. So I think what really to learn here is how they were able to use the data beyond the traditional ways of working of a bank, and actually we can partner in that. And I truly believe the innovation has to come not on a technology front in this specific segment, it has to come on the monetization model. They'll have to think, what Tariq was saying, it has to be beyond their 1-2% margin business, because 1-2% is today, nobody is willing to give money in a bank at a 1 or 2%, given where the interest rates are. It's starting at a 4.5%. Everybody is advertising today that, this is what we are ready to pay to raise a fund. So to me, credit is an important part to it. And I think there is some level of learning curve for banks to come in. And that's what I'm most excited about, at least in the next 6 to 12 months. Because if you would have asked the same question 2 years back, I think these guys were flushed with cash and they were not interested in essentially working with the bank. Initially, the whole thesis was, we'll take them head on and we are going to create a disruption. But as the model evolved, they did realize equity is not going to work into the lending model. And
That's actually a bad idea.
Yeah.
So, guys, we're coming to an end to it. I have one question which is for all of you, right? And I'd like you to qualify your answer. And I guess, Ahmed, we're going to start with you on the far end, right? So BNPL, see your crystal ball. Is it a fad which is going to fade away and evolve into something that is unrecognizable from where we are today? Or do you think BNPL becomes a very key and integral part of the way people, I guess, lend or use lending and make payments?
That's for me.
No, sorry, Ahmed, I'll start.
See, it's always a challenging part to predict the future when it comes to subjects such as BNPL. I think the regulatory aspect today, that is what's taking place today with the emerging regulations that we're seeing in the region, can play a big role in increasing, let's say, the user trust into the BNPL. I think I think another part is looking at the actual credit practice and looking at over the data over a long period of time and seeing the default rates, how material they are, and in return, answering the questions on sustainability from BNPL. I think time will only tell us that. There is always the debate also of, the debate of over-lending consumers, okay, and whether providing the options for consumers to, more deferred and more deferred payments. I feel, with that respect, I feel in order for the BNPL providers to continue, let's say, the growth and the adoption, I feel that there has to be some sort of connection between the different BNPL providers so that, the credit, let's say, appetite or the credit limits are within the same visibility, at least, rather than every party going with different credit lines and you end up with a consumer having multiple credits with 6 or 7 different BNPLs while, they're not really looking at, exactly the credit profile there for that particular consumer. So I think those pieces are very crucial for the continuity of BNPL within our region.
Okay, so we're out of town. Very quickly, BNPL, fad or here to stay?
I believe it's going to evolve. Now, with the coming of AI, many things will change. Now, I do see the competition between the banks and the BPL providers, but I think AI will be a big game changer in the aspect of the credit analysis. And this is basically the key factor. So AI can, AI can...
So it's here to stay, it evolves because of AI.
I do believe it's going to evolve. It's going to stay and it's going to evolve.
Tariq, I'm going to have to skip you because I'm getting calls to go. Ali, last say.
I think the traditional BNPL model is a fact. Because of the ecosystem evolution, it has to evolve. I think next 12 months, you will see a consolidation and a participatory consolidation, in my humble opinion, by various players into the market, which will essentially, this model will embed with, where they can get the right capital support and the right scale. Now, it could be part of a banking system that the banks go ahead and acquire certain players. It could be some telcos, some money management, non-banking financial institutions come into the play. But you will see some level of ancillary industry consolidation to provide them that lifeline of capital as well as scale.
Right. So I hope the banks don't acquire them. Investments would be okay. But with that, I guess I'd like to thank the panelists. So I guess a big clap for all of them. Thank you.